Hey everybody, Signet here with the Bullish Bears. Going to do a real quick video on an addition to the portfolio. We're going to start building this position on 9/28/2020. So this is a chart of Walmart. It's a weekly chart. You can see that I've got a couple of indicators on here. In the lower portion of the screen, we've got the on balance volume. On the right side of the screen, we've got the cone of probabilities. And then in yellow, which I'll highlight now, that indicator is a comparison indicator showing the SPX. So those three indicators give us a representation of the increasing volume, uh, using this to identify accumulation in the marketplace. You can see that we are above the moving average and we are above the zero line on the weekly on balance volume. That's a good sign. We haven't been above the moving average and holding above it since 2018. All right. The next thing is the cone of probability. I have this on here because one of my targets is to see Walmart at these yearly highs or all-time highs by the end of the year, and to demonstrate that Walmart actually can get there by the end of the year, I wanted to bring up the cone of probability and demonstrate that it's not that I'm not reaching too far. The expected move for Walmart with the level of implied volatility right now can clearly reach the 157. Okay, so seeing it cross above the 150, the 151, the all-time highs, I don't think that that's an unreasonable expectation. Remember that we've got Christmas. Now the Christmas numbers really won't be reported until January, but we also have Black Friday coming up, and that leads us into the next thing. So on this chart, you can see I've collected a little bit of data. Let's talk about a few of the pieces of data that I've collected across the web. Walmart needs to increase its e-commerce, its online sales. It needs to do this for a couple of reasons. For one, it has already been in competition with Amazon for a while. And what they were doing to kind of take the fight to Amazon is they started to develop Walmart Plus. That's been in the works for quite a while. They entered into a 5-year partnership with Microsoft that expires in 2023. The focus of that partnership is to expand Walmart's online presence. They're working on an app kind of like Shopify, a social media app a little bit like TikTok. And then when TikTok came up for sale, Walmart put its bid in to get a hold of that. And one of the reasons that they want that is they believe that they can build within the TikTok app a way for people to shop directly from the app without having to leave it. If they don't get that done, they still have the partnership with Microsoft, which they're also using to help target customers. Okay, they're using machine learning and artificial intelligence to help their apps do follow-ups to keep track of what people look at on their phone. They do have a partnership now with Shopify. So that's another thing that they've got going for them. They are listed in consumer staples. Their industry is hypermarkets and supermarkets. They're ranked number 1 in their industry, number 2 in their sector, and they are ranked number 26 overall. When it comes to dividends, they don't have a bad score. Not exactly amazing, but still not bad. When we apply all of the fundamentals and use a grading average, you can see that there is 1A, 2 B's, and 2 C's. The A comes in from profitability, and the C's come from value and growth. Now, growth is what I really want to hammer down on here. Same store sales growth from 2016 has increased really well. It dropped here in 2020, and that's to be expected, right? The virus, people trying to social distance, shop from home. But the real explosive growth between 2017 and 2016, and then the numbers that came out in 2017 is what propelled it into this whole new level. It's what helped it get above 80 way back in 2017. So those numbers went from 1.4 to 2.1, and then from 2.1 to 3.6. This sales growth is what grew price on this chart. Walmart would still be tinkering around in the 70s if it had not got that growth moving in the right direction. Now, with the virus keeping people out of the store, they're really pushing for an online presence. So let's talk a little bit about that. Their US website traffic back in February before the virus was close to 300 million. In May, there was another look at their website traffic, and it was better than 4.25 million. Okay, so some good numbers there as an increase of eyeballs or how many people are visiting the site. E-commerce in Walmart currently accounts for 8% of Walmart's total revenue and gross margins for online sales. Now think about that for a moment. There is a lot of room for expansion there. They have a 77% stake in an India company called Flipkart, and that's an e-commerce company over in India. The pandemic, the coronavirus, it's global. So social distancing is a big deal all around the world. Flipkart is the biggest e-commerce company in India, and Walmart's got a very large stake in that. During the first quarter of 2020, Walmart's e-commerce business grew 74%. That's some amazing numbers, guys. Remember, they're only accounting for 8% of the total revenue in Walmart. So the expansion there is amazing. 74% growth on the e-commerce side in the first quarter of 2020. That leaves a lot of room open. 97% in the second quarter also was attributed to customer shopping online. All right. Now let's look at other countries since we talked about India a little bit. The e-commerce in Mexico is up over 200%. In Canada, up over 200%. The anticipated growth for next year, we're looking at 8.5% for 2021. 8.5%. That's going to be explosive. For 2022, it dials back to less than 5%. 2023 is looking like better than 7.75, and for 2024, better than 9.75. So these are some really amazing numbers, guys. With this kind of growth, I really see Walmart doubling in price from its current location by 2024. And if those numbers sound extreme, remember that it has already doubled in price. On this 5-year chart, the low is $56. Let's just call it $51. We went from 51 to 151. Okay. I think we can go from 151 to 300, maybe 350. With this kind of sales growth, it's looking really good. With their strategic partnership with Microsoft to work on an app, even if they don't get TikTok, which is what caused this latest pop in the price, if they don't get TikTok, it's not a problem. They're already working on their own media app. They're already working on getting more eyeballs, right? So uh, things would go a lot faster if they can get a hold of TikTok, but it's not needed. They've been doing really well on their own, and it, they've got so much room for growth here. So we're going to start building a position in Walmart because of all of this. Now, I gathered this data from a couple of different articles. Almost all of it came from Seeking Alpha, but I honestly don't think that you would need something like Seeking Alpha to get most of the news data that you see here. The value here, this grade point average and the dividend lettering, yeah, okay, you might not be able to get that for free, but I think you could. I think if you look around places like Bar Chart or maybe FinViz Free would have that kind of ranking or a similar ranking, so that if you're not real good at grading the fundamentals in a market, that you would find someplace that'll give you that kind of scorecard. Okay. For all the other data on here, I really believe that you can find it for free. The main thing about looking for a company to invest in is you want to focus on the story. What does the company do? Why do you think that it's a good thing to invest in? How are they going to make money? And in the market that we're in right now, how are they going to make money if the virus puts everybody back into lockdown? We are coming into winter, so the idea that the virus is going to come back with a vengeance is a real threat. So when you're looking to add companies to your portfolio, think about how is a company going to make money if people really get aggressive with the social distancing. I think Walmart's in a good position to weather through that. Now, back in February, everything went down, right? There was no safe haven or defensive market. Back in February, when things got really bad, everything went down. I have no doubt whatsoever that if things start to get bad, Walmart will go down just as much as everything else is going to go down. But I think the recovery in Walmart will be fast, just like it was back in February. Walmart recovered a lot quicker than the S&P did. Okay? It fell less and it recovered sooner. I expect the same thing again because of the online sales. With that new Walmart Plus, people are going to be able to shop for groceries and have it delivered same day. I really think that's going to be a big deal. Plus, they still have curbside service, so people can put in their order, drive up to Walmart, and get it delivered right to their car. So this one is going into the portfolio. We're going to start building it out on Monday. And my total allocation here on stock, I believe we're going to go around $500 total, but we're not doing that all at once. One of the reasons is because I've got commitments to allocate capital into other uh, markets, and because I think I have time that I can let this build. We're also at a key inflection point. We just had a weekly Busby, and yes, we could rally out of that, and I could miss my entry, but I don't I don't think that it's in such a danger of rallying hard that I can't ease into this position a little bit at a time. Okay? I have no need of just taking the entire position all at once. Plus, I mean, you know, keep it realistic. It's not like I can just keep popping money out of, the piggy bank to buy into markets whenever I want to. All right, so we're going to just ease into this a little bit at a time. But the total allocation is going to be around $500, and this is going to be a 3 to 5 year plan. My ultimate target in Walmart, like I said, is around 300, maybe 350. That would be at least double of its current location, right? I want to see some real growth in this company. My immediate target is back up to the top of the range. We're going to do that with options. It's one of the reasons that we're not going to be focusing too much on the accumulation of stock all at once. We'll let those options trades add some money to the kitty to help pay for that stock. All right, so guys, I appreciate your time, and I look forward to seeing you at the next investment video.